I am Dr. Gitanjali Bhatt Sharma, working as an assistant professor at Uttarakhand Open University in Department of Management Studies and Commerce. In the last lecture, we learnt about the understanding of financial inclusion, the concept of financial inclusion, its pillars and importance. And in this session, we will continue with the same topic. And here we learn the operations of financial inclusion. We talk about the financial inclusion index. What are the game changers of financial inclusion? How financial inclusion is a way forward? Strategies for financial inclusion? Some success stories, case study of Pradhan Mantri Jan Dhan Yojana, and what are the future trends and recommendations. So, first of all, what are the operations of financial inclusion? Under financial inclusion, the main aspect is access to financial services, and this can be broadly divided into credit, wealth creation, and contingency planning. So, according to the concept of financial inclusion, under the credit aspect, a low income individuals needs proper access to emergency loans, consumer loan, housing loans and business livelihood loans at very affordable rates. Under the wealth creation aspect, a poor individual should be able to make excellent saving and able to access the reliable investment options that generate good return. Every low income household should also have basic financial literacy, and they should also understand the concept of risk in financial management. Now, under the contingency planning segment of the financial inclusion system, it is very important a poor person should have access to funds that can be utilized exclusively in the future. It is not enough if these people have only the means to improve their income and enhance their lifestyle. They should also have the right resources to be prepared for the future, especially when they get older. Many of the poor people may not be aware of the retirement plans. They should be provided with the affordable retirement plans that will give them a very good return in the later stages of their lives. So they should also be given insurable contingencies to keep themselves safe as well as secure. Nowadays, there are many less fortunate people do not have even think of taking a life insurance policy or a vehicle insurance policy due to the high cost involved. Insurers should offer insurer options at subsidized premium to the economically weaker section. And these insurance policies will give them a very coverage and prevent them from paying compensation cost when something unforeseen or unfortunate happen to them or their family. And they should also be given buffer savings to be prepared and ready for the very unforeseen or emergency expenses. So this way they would not have to go to their relatives or their friends or any money lenders for any monetary support. They can also be always financially ready, and they can cope up with the situation of any financial emergency. So, moving on to the financial inclusion index, many of you have been aware of this term financial inclusion index. So, it is an index to capture the extent of financial inclusion across the country, and this is published by RBI every year, and it follows some parameters. The parameters of financial inclusion index are access. First is access. It means the measures the availability of financial services such as the number of bank branches, ATMs and mobile banking services in a given area. Usage means access, how frequently individuals and businesses utilize their financial services, including their saving accounts, loans, and insurance products. When we talk about the quality, this is also one of the parameters which evaluates the quality of financial services, including customer satisfaction, transparency, and affordability. And the last is regulatory environment. It considered the legal and regulatory frameworks that facilitate or hinder financial inclusion. Now, we will go through some of the game changers in financial inclusion. The first game changer in financial inclusion is digital payment and mobile money, mobile banking, we can say. So, everybody is using nowadays mobile wallets, that is Paytm, Google Phone, Google Pay, Phone Pay, and these have created a revolution in the financial access by they have allowed people to transact without any traditional bank accounts. And there is also neobank and digital only banks which offer services without any physical branches. This is also reduce cost and expands the reach. Another is microfinance institutions and SHGs which provide small loans, helping the rural women and small businesses. And there are many impact driving models like group lending which improves repayment rate, and even this open the path of financial literacy also. And the game changer is Aadhaar and biometric identification. So here in today's era, India's Aadhaar based financial services has enabled easy KYC, which means know your customer. And this direct benefit transfers DBT for the millions of people. They are biometric ATMs. This helps unbanked individual so that they can access their money securely. There is also UPI, which is Unified Payment Interface and Instant Digital Payment. And this India's UPI has transformed peer-to-peer and business transactions, enabling real-time seamless digital payment. There are other countries are also adopting these similar kind of models to enhance financial inclusion. Now, moving on to the how financial inclusion is a way forward, how it can create a way forward. So the first is it helps in enhancing financial and digital literacy. We know it is very crucial to increase financial literacy, especially in the rural and the underserved areas. Program needs to be focused on educating people on benefits of banking and digital payments which help them become financially independent. Another is promoting artificial intelligence. Artificial intelligence is very popular nowadays, and everybody is aware of artificial intelligence and heard about the artificial intelligence. So AI could also create a revolutionary step in financial inclusion by enabling their language based interactions. Next is expanding digital infrastructures. Developing a digital infrastructure, particularly in the rural and the remote areas, is essential for fostering financial inclusion. So the government as well as the private partnerships can expand the internet access, and they can also and digital financial services. Next is targeted credit scheme, introducing a very affordable credit schemes tailored to the needs of low income groups and women can encourage them to enhance in entrepreneurship and self employment. Another step is strengthening fintech partnership. Nowadays, collaborating with the fintech companies can lead to a very innovative solutions for the rural banking, micro insurance, and instant payment making financial services, which may be accessible as well as affordable. Another is policy and regulatory support. A conductive regulatory environment can further enhance this financial inclusion, supporting initiatives like digital KYC, flexible credit assessment, and incentivized banking expansion into the underserved areas. So these are the step forward points. Now, what are the strategies for enhancing financial inclusion? Let's talk about this. The first is policy advocacy. Like today's with working with the government and the regulatory bodies to create policies that promotes affordable financial services for all, especially for the marginalized groups. And it includes reforms like simplified KYC norms, financial literacy programs, and incentives for the bank to reach to the rural areas. There is another mobile banking solution, like leveraging mobile technology to offer banking services like the payment, saving, and credit through the smartphones or basic mobiles also. So this overcome physical barriers, and this will reduce transaction cost and make the banking accessible even in the remote areas. Next point is a partnership with local organizations. So, while collaborating with the NGOs and self help groups, cooperatives, and community groups that understand local needs, and these partnership help build trust, spread financial literacy, and this may also extend the reach of financial services effectively. There is another point which is microfinance initiatives, which provides a small loan, saving, insurance, and other financial products to the low income individuals or group who are lack of traditional banking. And this microfinance programs have empowers people, especially it's empowered women to start business, or they can improve their livelihood. Even it will help them to reduce the poverty also. Now, let's discuss some couple of success stories of financial inclusions. So the first one success story is one of the most notable success story in financial inclusion is M-Pesa, a mobile money transfer service which is launched in Kenya in 2007. And M-Pesa has made a very revolutionary step where Kenyans conduct financial transactions, and this may allow users to send and receive money through their mobile phones only. And this M-Pesa has significantly increased access to financial services, particularly to the rural areas who were very deprived of the cash, who were previously relied on cash transactions, and they are deprived of these services. So the service has empowered small business, facilitated remittance, and improved the overall economic landscape in Kenya. Now the next example is of Grameen Bank model, which this model has been founded by Muhammad Yunus in the year 1983. And Grameen Bank is a microfinance organization which provides small loans to the impoverished individuals. And this is also basically primarily for the women with, and this doesn't require any collateral. And this innovative approach has enabled millions of people to start their own business and improve their living conditions also. So the Grameen Bank model has been replicated in nowadays in replicated in various countries, demonstrating the effectiveness of microcredit in fostering the entrepreneurship and financial independence among the marginalized communities. Third success story is of financial inclusion is Paytm. Paytm, everybody have heard about Paytm, and everybody is using also Paytm. Most of the population is using Paytm nowadays. So Paytm is a digital wallet and a payment platform in India which has played a very crucial role in financial inclusion. And this has been launched in the year 2014. And Paytm also enabled millions of users to access banking services. This makes the payment and this conduct transactions digitally. This platform, Paytm platform, has been particularly beneficial for the small merchant and vendors also, because it will allow them to accept payment without the need for any traditional banking infrastructure. So the Paytm success in India have highlighted the importance of how technology has bridges the financial gap for the underserved population. And these success story of financial inclusion just illustrate the transformative power of accessible financial services in improving lives, and this fosters economic growth also. Now look at we go through the case study, one of the case study of financial inclusion which is very successful, that is Pradhan Mantri Jan Dhan Yojana. And financial inclusion is crucial for the economic development, and it ensures individual and businesses access the financial services. So to address this issue, the Pradhan Mantri Jan Dhan Yojana, which was launched in 2014, it aims to provide every household with a bank account and access to financial services, and even with the social security benefits. The implementation of Pradhan Mantri Jan Dhan Yojana are as like increase in the bank accounts. Like Pradhan Mantri Jan Dhan Yojana has led a massive rise in the number of bank accounts, especially among those who were previously unbanked. This improved financial inclusion, enabling the people to access the saving, credit, insurance, and pension facilities. This also helps in women empowerment. As we know today, lot of women have their accounts in the Pradhan Mantri Jan Dhan Yojana account, and they are the account holders. Women are the account holders, and having their own bank accounts help them, women, to gain financial independence and manage their own money. And particularly, they will be more actively in the economic activities. They are also included in the economic activities, and they feel themselves more independent. In the same way, it also happens in the rural inclusion, that in the means nowadays a lot of accounts have been opened in rural areas, and this ensured that the rural population, who earlier had very limited access to the banking services, and they could now benefit from the modern financial system, leading to a very better economic opportunities. Another is direct benefit transfer. In Pradhan Mantri Jan Dhan Yojana, by linking accounts with the Aadhaar or government subsidies and welfare payments like LPG subsidy or any scholarship or pensions, these were transferred directly to the beneficiaries. This will helps in cutting down the corruption as well as the involvement of middlemen also. This Pradhan Mantri Jan Dhan Yojana has also have a rise in the digital transaction. There was a very noticeable growth in the use of mobile banking nowadays, UPI and other digital payment system among the rural as well as the semi-urban population. And this not only made this transaction easier and safe, but this also supports India more move towards a very cashless economy. So the financial inclusion has plays a very critical role in empowering millions of underprivileged individuals in India, particularly women who are belonging to the rural areas. So now we will discuss what are the future trends and recommendations. What are the future trends and recommendations for financial inclusion? So the first is central bank digital currencies. These are the digital form of fiat currency. These are issued by central bank, and they aim to provide a very secure and efficient means of payment, which enhance financial inclusion, and even it improves the efficiency of payment system. Next is biometric verification, which utilizes unique physical characteristics such as fingerprints or facial recognition to authenticate the users, and this technology has also enhances security and user experience in digital finance. And the benefit for financial inclusion of biometric verification is this: it reduces fraud because it's prevent identify theft in the mobile banking, and it also simplifies onboarding, and it also supports literate users illiterate users. It means it supports illiterate users, like using with the voice or facial recognitions. This will bypasses the literacy barriers also. And next is, as we all know, that digital financial services has expand globally. As soon as these are expanding globally, cyber security threat is also arising, and it is increasing nowadays day by day, and particularly in the emerging markets where financial inclusion efforts are more active. So the rise of mobile money, digital lending, and CBDs have opened a very new avenues for the cyber criminals and targeting vulnerable population with the limited financial literacy. So this is all about. So to conclude in short, these are some points. So financial inclusion have lifted the marginalized groups out of poverty by providing saving, credit, insurance tools, and also enabling entrepreneurship. Mobile money, agent banking, and fintech solution have bridges the gap in financial infrastructure. bringing banking to the remote and very low income population at the lower cost, closing the gender gap in financial access, empowering women economically, fostering inclusive growth, and this also reduces the systematic inequalities. It aims to provide tailor-made and custom-made financial solution to provide poor people as per their individual financial conditions, household needs, and preference and income level. Finally, financial inclusion helps in a better monitoring and regulation of financial transactions using digital technology. This is all for today's lecture. In the upcoming lecture, we will discuss largely about the digital banking, payment system, and investment platform topics. Looking forward to your presence. Thank you.